So in this video I want to talk about behavioural finance and how that's going to have a key factor in decisions that not only you're going to make but other people are going to make. And if other people are going to be making certain decisions that you can grasp in the markets, then it is a good idea to understand just how behavioural finance works and how you can use it as a confluence or even just a little bit more confidence towards making your trades. So we're going to do this with LTCUSD, also known as Litecoin, and this is going to be a step-by-step process of everything that we have taken and everything we've done trading this crypto. So the reason we got back in our very first trade, somewhere around here, if we go to our object tree, we'll be able to see the first long position was somewhere around this region here. Now the reason why we had gotten in this trade, if we just quickly hide these again, was largely to do with behavioural finance. See, when you have things like this that have really just taken off, if we just take, say for example, the 16th of December 2020, right now we are currently in August 2021, when you see something like this taking off and starting to create some structure and then creating a high in the market, that is typically an area that the market will revisit. Now, because we are starting to see some structure, we're able to now get some levels, and then we had seen that sharp decrease from that spike way up at 413, crashing all the way back down, and then we took us up till the 22nd of July till this year before we decided to make a pivot again. Now, how high will this pivot go? Nobody knows, but what stood out to me was, again, we've mentioned this in other videos, but a descending triangle would typically break to the downside. Now if you notice, this isn't hitting, coming down, hitting, coming down, hitting, coming down, hitting. They're not really significant lows to say that this area of support is getting hit every single time until we had these two significant touches here. But what happened with these significant touches is typically the area where you would see that breakthrough, or at least see price action starting to show signs it's going to break below, we had seen on the daily this big bullish engulfing candle. Now that obviously sparked a lot of interest for us. You can see here, normally this would come back down and then you would maybe get that breakthrough around about an area like this. Typically speaking, of course, it doesn't always work like that, but we started to see the market push out. Now if we quickly go back to the object tree just so we could see exactly where we got in the first time. Okay, so we've gotten in around this area here. So for us, this wasn't really a massive breakthrough, but nonetheless we managed to sustain it. Then we ever so slowly started to drift, creating the pullback to this push, and then we got that significant push up. And then this was what was interesting for us, was it showed us that the buyers had started to take control and the sellers were respecting the fact that we are going to be moving higher, and ever since we started to do so. Now, without following the trade and going through all the steps, I want to quickly mention that the whole behavioural finance aspect, if you see, again, something like this that has created a market high all the way up here, we've crashed all the way down, and then you start to see some bullish momentum, you know that people are going to be looking at this. Now, in no way, shape or form can you guarantee that this is going to move in any way, but this is the exact thought process of me looking to get in this trade. In fact, we're going to show you the profits that we've made on this so far over the past week. Just so you know that these are legit, you can see that we do have all of our long positions here on every single trade that we took. We had 1, 2, 3, 4, 5, 6, 7, 8, and you should be able to see 8 or so on the screen, and that was our profit, around just over 15,000. So that understanding the structure, seeing that a crypto like this is actually starting to show ebbs and flows in the market, is starting to show consistent levels that we can now rely on. You can see that we could have relied on this level. This is where I took this from. I slid it all the way over because I noticed initially we had this good touch, then we had that second good touch, but typically what I would have been anticipating would be a break to the downside, but just understanding not only behavioural finance but market structure and of course momentum and candlesticks. So if you look at the candlesticks and again how price action was behaving, typically a double bottom, you can see there's a small double top here. It's very insignificant considering the fact that we've just had a little double bottom here, but the real double bottom I would say is this bottom here and this bottom here. Now what you typically want to be looking for in a double bottom is not something that comes back up 1-2 candles and then comes straight back down. You want to have, you know, at least 4 to 5, sometimes 6 candles, so you can see 1, 2, 3, 4, 5, 6, came back down 7, 8, and then we've come back down for that inverted double bottom, sorry, because we haven't superseded this low. So then we started to push off and then we've broken out of the initial downtrend that we were anticipating for a break. And just again by analysing how it was being respected outside, that can then give you confidence to try and get in a buy position quite early without having such a high risk of the market coming back down, crashing below, and then maybe using the inside of the trend line as a resistance and carrying it back down below. So that's the reasons why we looked to get in here, and ever since we've been scaling and adding positions. You can see we had a lot of positions here, but as the market started to progress and really start to go through a couple of cycles, a couple of push and pull phases, we started to move our stop loss to entry, taking all risk off the table. We had our stop losses slightly bigger just for the sheer fact of the volatility on crypto. As you can see, if you looked at the daily, if you were to be caught in anything remote to something like anything remotely like this or this would have just wiped us completely out. It is extremely volatile, so we did have wider stops to make it that little bit less riskier. So that was what we were looking at, the behavioural finance part of just understanding that a lot of different people and institutions are going to be looking at this. They're also going to be making decisions based on the fact that what are other people looking at? Is this something that is going to be a trend that many people hop on and that we could all get on at safe points of the run with reasonable targets? Now reasonable targets would be of course highs like this, and then once we start to push past, we can then start to target these highs, and then the overall target would be anything above the 300. My personal target would be that 300 mark without getting too greedy and just cut all this noise out. And then if we did manage to get some sort of real strong break and hold, then we can maybe start to look to target things like that. But again, until that does so, we've got a long way to go. It's been a good day. This is why we took our profits, because then when we do take our profits, we're able to analyse the chart again, and then if the signs are there, if we are still going to keep climbing, then we will get in safely, but we will get in with a bigger lot this time. And of course, as always, if it starts to move in the right direction, we are going to be adding in multiple positions and getting our stop loss to break even as fast as humanly possible. But the main point of this video is to go over the behavioural finance aspect of it. Now, to go into it in a little bit more deeper detail, if you go into, I'm going to show you the trade that the very last position we got in before we closed this. I'll show you is, so as you can see here, we had taken this low here to these highs, and that gave us our fib retracement. So we were taking this initial push up and this as the pullback phase, and then understanding behavioural finance, we know that every single push has that push back. It's just knowing when traders are going to start to look to push the price back up again. So as you can see, price action had hit very well on the 0.3, pushed away, broken back through, hit the 0.5, pushed up ever so slightly, and then this is where we looked to get our entry, because we'd seen this hammer candle here. We'd created a lower low, lower high, lower low. We struggled to really roll over. We created that hammer candle right about the time that we should have started rolling over, and then boom, we started to progress up. Now, I didn't actually expect for it to move quite so well, but it did. So we took our profits round about here, along with all these other positions. That's what you've seen on the screen earlier. It was all those positions closed on the exact same day. And now we're going to be looking to enter other positions should the market do so. But understanding that every single time price action is going to be surging or moving or trending in a really good manner, you're always going to get that pullback. People are going to be looking at their profits. They're going to be grabbing them whilst they can, especially if the market gets really overextended, and that's when you start to see these big massive drops, pullbacks, retracements, and then that's when we look to, bearing in mind that they don't break the previous low, and we sort of have a sweet spot. My sweet spot's anywhere between the 3.8, the 5 and the 0.618. Of course we'll all use the 0.786, but at the exact same time it shows a little bit less strength in terms of movement as the pullback is a lot deeper, although you still can catch really good moves from those retracement levels. But I just wanted to break down a little bit more about behavioural finance and how we were able to look at this before anything started to break out and have an idea of now could be the time for it to break out, based on no technical analysis really, a couple of trend lines, but basically naked forex trading, looking at the charts with hardly any indicators. We have a 50 EMA now and again for further confluence, but again, all of our analysis is used and decided on just blank plain charts. And I feel that is the best way when you can master levels, when you can master price action, when you can master structure, you could master price action behaviour, and you could also master really highly sensitive areas in the market on not only the bigger time frames but also the lower time frames, the levels in between the larger levels that are going to get you to your take profits. So I hope you've enjoyed that video. Again, there's going to be a lot more videos like this, so like this video and of course subscribe, hit the notification bell so you can get instant notifications on all videos like this. So again, we're going to be back on Wednesday at 7 o'clock with a market recap. So until then, have a good trading week and we'll see you then.